Hello teacher, we are group 1 from class 45K08.1. Today we will present the affecting of COVID-19 pandemic to Thailand economy in 2020. Our presentation includes 8 parts. The first one is introduction and the rest are 7 basic economic indicators. In recent years, Thailand's economy has been gradually stabilizing and developing more and more prosperously. This country rose and transformed itself into an upper middle income economy. Tourism has helped Thailand gain more than 500 billion baht in GDP in the first quarter of 2020. Thailand is the second rice exporter in the world with more than 7.5 million tons of rice worldwide in 2019. But in 2020, the COVID-19 broke out in Thailand. It developed prominently into large waves. The first phase started from January 13, 2020, and the second phase started from December 21, 2020. Next, we will introduce about the timeline of COVID-19 situation in Thailand. On January 13, 2020, the Ministry of Public Health announced the first case of COVID-19 infection. From the end of May to the beginning of September 2020, Thailand seriously implemented measures to prevent and control the disease well, so there were no cases of infection in the community. On September 3, 2020, the Ministry of Public Health continued to announce the first coronavirus positive test after 100 days with no additional community infection cases. On December 21, 2020, the second COVID-19 wave in Thailand broke out, beginning with the registration of more than 500 viral infections. The pandemic has seriously affected Thailand's economy, a 9.7% decline in the first half of the year 2020, the biggest number ever recorded in 2 decades.
The National Economic and Social Development Council of Thailand on 15th of February 2021 said that Thailand's GDP in 2020 has decreased by 6.1% due to the epidemic of COVID-19. This is the biggest decline in Thailand's economy in more than 20 years since the Asian financial crisis in 1998. GDP growth reached minus 12.2% in the second quarter of 2020, the lowest level in the previous 5 years. In early 2020, especially on 13th of January, when the first cases were detected in Thailand, consumption and investment in the country plummeted. The reasons for this statement were the gap orders, the nervousness of individuals makes them tighten their spending, and low business prospects. By mid-March 2020, when the number of infections reached a worrying number, real estate companies became the victim of this pandemic. There were about 100,000 empty apartments in Bangkok because they cannot find people having abilities to buy. The country lost about $4.3 billion in revenue from tourism in the first quarter of 2020. The Tourism Authority of Thailand found that the number of international visitors to the country fell 60% in the first 5 months of this year to 6.69 million. The number of international visitors in 2020 were forecast to decrease by 80% compared to 2019, only 8 million foreign visitors. According to the International Labour Organization, tourism accounts for 12% of Thailand's GDP and provides jobs for nearly 1 on 10 of the country's citizens. 2019 is the peak year for Thai tourism with a high record 39.8 million foreigners, their spending accounting for about 11% of the country's GDP. From the second quarter of 2020, the Thai baht has increased by more than 6%, becoming the currency strengthening the second most strongly in Asia. The weakening of the baht stems from harsh economic. Thailand, the exports were affected seriously, according to statistics In September 2020, Thailand the export of cars reached 63,941 units, a decrease of 34.45% compared to the same period in 2019. The reason was that the car sales in partner countries such as Japan, the United States, China, Singapore, Malaysia had not recovered as before and declined due to the COVID-19 outbreak. On 10 to 12 January 2021, after conducting a survey of 1,884 businesses in tourism sector, the Tourism Authority of Thailand showed that 34.7% of enterprises had to close or stop doing business. One closed company could hurt another the income, which led to an increasing number of organizations with deficient liquidity to reimburse liabilities.
The price of raw materials in COVID-19 periods is higher, lead to a decline in Thailand productivity. For example, timber, cardboard, aluminum canisters, and clothes materials were among the raw materials that are rare during the COVID pandemic. Many organizations needed to adjust their creation and face expand because of the continuous deficiency of aluminum cans. In this epidemic period, ordering these materials for production uses could be difficult because of lockdown and other rules to protect the nation. 4 billion baht economic recovery support package, of which 90 to 100 billion baht would be devoted to job development, tourism promotion, support for small and medium-sized enterprise, and the provision of advanced training programs to develop skills for employees in the automotive, digital, automation, and other target industries.
COVID-19 period, there were a lot of reasons for workers being absent, such as office closures, sickness, quarantine. It led to a result that the industries with a high number of jobs had to close in a long time, like services, entertainment, support services, and industrial employees. The reason for this figure was that migrant workers from Myanmar, Cambodia, and Laos gradually returned to the country before the border closure order. On 21 to 28 of May in 2020, in the total number of people studied by the center, there were 61.4% unemployed because of the virus crisis and closure policies. Besides, there were still 38.6% jobless people because of other reasons. Whereas some people believed that due to the pandemic, their companies would close, about 6.4%, and 17.4% of business owners announced staff cutbacks. COVID was part of the reason that formal employees became informal, leading to a lot of disadvantages for informal workers and difficulty in receiving benefits and social insurance.
In March 2020, CPI reached the lowest level in the past 4 years, decreasing by 0.54% from the same month in 2019, of which there was a large decline of 4.93% in transport and communication field. Major reasons were the coronavirus pandemic greatly reduced the demand for energy in the world. It led to plentiful supply in the market. In addition, an oil price war happened between Saudi Arabia and Russia. Both of them made energy prices, particularly oil price, plummeted the most in 20 years. Since March, the peak month of the first phase, CPI has decreased for 5 consecutive months compared to 2019. According to information from Vietnam Trade Office in Thailand, by July, CPI has dropped by 0.98% if assessing the same period in 2019. CPI fell continuously in 5 months, which reflects the deflation of Thailand economy. Deflation will cause economic activity to stall as more consumers wait for deeper discounts. Businesses delay investment and recruitment to save costs. When the second epidemic broke out, CPI reached the highest level in the second half of 2020, rising 1.15% over the previous month. This may be caused by a surge in demand for personal protective equipment, which led to a marked increase in prices in the medical and personal care field.
The COVID-19 pandemic had a strong impact on Thailand's economy, which was highly dependent on exports. Exports has been affected by the outbreak of COVID-19, which caused logistic problems and global demand plummeted due to financial difficulties. Besides, the sharp increase in the value of baht put further pressure on Thailand's exports. In March 2020, exports and imports suddenly increased by 4.2% and 7.3% respectively when compared to March 2019. Auto and spare parts exports decreased by 5.6%. In contrast, consumer goods imports decreased because of global financial difficulties. It made Thailand's residents have to save money as much as possible for what is truly necessary. In October 2020, although Thailand's exports fell sharply by 6.71%, exports tended to recover when the world had developed a vaccine COVID-19. Thailand's exports value in December 2020 reached $20.1 billion, went up 4.71%. This is a positive sign for Thailand's exports when it fell 3.65% in November. At the same time, imports also grew by 3.62%, reaching $19.1 billion after a longer negative duration than the exports. Food, household goods, anti-epidemic products such as rubber gloves, protective gear, medical masks, and medical equipment were among the commodities that increased sharply in December, especially when the COVID-19 had broken out for the second time in Thailand. Thailand's trade balance in 2020 witnessed a sudden increase when the surplus value reached $24.48 billion, leaped 144.5% compared to 2019. However, the increase of Thailand's trade balance didn't mean that Thailand's imports and exports were better than in 2019. Specifically, Thailand's exports in 2020 reached $231.47 billion, declined by 6%. Thailand's imports in 2020 reached $206.99 billion, fell by 12.4% compared to 2019. It was due to the negative effects that COVID-19 had brought to imports and exports in particular and Thailand's economy in general.
The Thai baht had weakened by 7%, so no one had been able to cope with a high-risk international visitor arrived and investors pulled out in the face of outbreak concerns. There was negative inflation in March 2020. The number continued to go down to negative 2.99 in April, after lowering by negative 3.44 in May. Moreover, the government reduced the petroleum price. It made a negative inflation in March 2020 from 0.74 in February to negative 0.54 in March. Besides, there are two ways to explaining the increasing of the inflation rate. Firstly, the lack of money made Thai citizens exchange the gold jewelry into money. Then it increased the number of imported gold, leading to extension of the current account balance. Secondly, the government effort school lockdown may fix price makes the real effective step to reduce the number of COVID-19 cases.
On 20 March 2020, 0.75%. To help corporations survive to COVID-19 disease, the Bank of Thailand, which is BOT, lowered its policy interest rate on 20 May 2020, 0.5%. This is a historical level of interest rate. There are two Banks of Thailand's effort to raise the SMEs. A soft loan 500 billion baht issued via financial instrument, 2% lower interest rate for 2 years, an interest-free first 6 months. Stabilize the market for corporate bonds with a budget of 400 billion baht.